If you're frustrated with skyrocketing rents and unaffordable housing, you aren't alone. Canada's housing market is broken, and it's not by accident. You can blame big corporations and wealthy investors. This report, released today by Canadians for Tax Fairness, shows us how certain tax policies are worsening our housing crisis. These tax policies are making it easier for big corporations and wealthy investors to treat homes as money-making assets rather than affordable places for people to live. Visit taxfairness.ca to see the full report. But let's get into it. In 2023, rents went up by 8%, whereas wages only went up by 5%. In 2023, real estate companies made $50.4 billion, which is 40% more than any pre-pandemic year. We're now being introduced to the financialization of housing. This report discusses how housing is increasingly being treated as a financial asset rather than a basic need. And this trend is being driven by tax policies that favor these investors and corporations over everyday individuals. Since 2002, profits from selling assets such as real estate have skyrocketed. Since these profits are often taxed at lower rates than other forms of income, it's increased the financialization of the housing market. Canadians for Tax Fairness examined the annual reports of publicly traded real estate investment firms, or REITs. REITs have grown to 2/3 of the real estate assets traded on the TSX. They must hold the majority of their assets in real estate and distribute most of their profits to investors each year. And unlike corporations, which are subject to corporate income tax, income is distributed to REIT investors without being taxed and then taxed at the individual level. Add this to the reduced capital gains inclusion rate, it ensures that investors pay very little tax, even when the majority of the money that these REITs make come from rents paid by tenants. I'm just going to encourage you to pause and read this page. Do you think this might have something to do with why there were so many individuals who don't have secondary properties completely raging about changes to capital gains rules, maybe? So how does financialization of the housing market drive rent increases? Financial firms own 20 to 30% of purpose-built rental housing stock in Canada and are now the majority purchasers of multifamily dwellings. So what does all of this have to do with capital gains and rental affordability? Since the REITs have two financial goals, to earn rental income and appreciation on the actual asset itself, the rental property, the value of their real estate is derived from the rents that they charge. Partially, partial is actually the property value, but because the rents that they charge is part of how their business is valued and they can control that, obviously they're going to increase it as much as they can. There's a REIT called Boardwalk, and in 2023, they increased the rent of their properties by 8.8% on average, while its rental expenses only increased by 1.6%. So when they increase the rent, they increase their flow of rental income and the value of their investment properties. Since many provinces have rent control, not anymore in Ontario, thank you, Doug Ford, it incentivizes these companies to evict tenants because the rent control only applies to occupied units. So they want to get the tenants out so that they can increase the rents without any restrictions on them. And that's what they're doing. So the financialization of the housing market has been encouraged by government policy. So these are the policies that we need to be questioning. Leaders or prospective leaders, will they make changes to this and stop this from happening? Because this will actually fix it if these policies are changed. We can be mad at the government, but we have to make sure that whoever comes in is going to actually address these root cause issues, or else nothing will get fixed. Even though most REIT income comes from rent, they're able to designate most of their distributions of the profit as capital gains or return on capital. This table up here shows the distribution of profits to investors of the 7 largest residential REIT companies in 2022. It shows that 70% of all distributions were considered return on capital or capital gains, where 30% was designated as other income. Of the $433 million distributed in profits in 2022 by these 7 REITs, 47%, or $203 million, was not taxable at the time of distribution, neither at the level of the trust nor at the level of the individual. It's important to mention that all of this tax avoidance is perfectly legal. It just demonstrates how tax loopholes are used by wealthy investors who profit off of the tenants who just need a place to live. This is no shock to anybody. Real estate companies are making record profits, but they aren't reinvesting in new housing or improving their existing properties. They're just focusing on extracting as much rent as possible with their existing properties. You can see the yellow line where those are the pre-tax corporate profits, and then the corporate capital expenditures is the red line, which is actually going down. So they're making more money, but spending less to upkeep those properties. Large landlords have significant power to raise rents however much they want because tenants have little choice but to pay. Add in politicians who get rid of rent control and it's open season. This power imbalance leads to rising rents, especially during economic downturns. The current tax system is supposed to be fair, simple, and consistent, but it's not. The system gives unfair advantages to income from capital gains and REITs, which encourages these entities to make their money from property sales instead of building or maintaining affordable housing. Some proposed recommendations by Canadians for Tax Fairness would be to build 1 million non-market homes, to end tax breaks for REITs, taxing capital gains fully in the real estate sector, and extending vacant property taxes to all owners, not just foreign investors. Canadians for Tax Fairness is a non-profit organization that advocates for tax policies that reduce inequality and support a stronger economy.